Thank you, everyone, and I hope you all enjoyed the gala dinner last night, and good to see so many of you make it here this morning for the 9 o'clock session. This is day 3, and we're going to start with a plenary on safer homes and affordable insurance. My name is Shranjit Padam. I'm an actuary, I work at Finity, and I co-lead our perils and climate practice. So we have a panel discussion today on this topic. And I'm pressing the button, and it's not moving. There we go. So I want to welcome our panel today. We have Andrew Hall, the CEO of the Insurance Council of Australia. We have Jake Elwood, the CEO of the Queensland Reconstruction Authority. Matt Collins, the CEO of the Planning Institute. And we have Jane Kern, from Head of Impact Management at Bank Australia. So as we'll probably cover in this discussion, building safer homes and affordable insurance involves a lot of people as part of that process. It's a wide stakeholder, government is involved, banks are involved, insurers obviously involved. And so we're trying to present to you here multiple viewpoints about the problem and how we deal with it. So we're going to start the session talking through a kind of like show and tell. So I've asked the panel members to give us an image and talk to that image about how it kind of talks to the problem, about how we have safer homes and affordable insurance in Australia. I will start. So bringing up this chart, which was from the work we did for the Actuaries Institute's paper last year, looking at home insurance affordability across the Australian market. And the headline on that is that our analysis showed that 1 in 8 households in Australia today faces home insurance costs that are larger than 1 month's worth of household income. And that threshold really is one that we think makes it unaffordable. So you can see in those charts there, I won't go through them in all detail, but essentially we looked at the ratio of home insurance to household income, and the red band up there in the chart is the ones where it's more than 4 weeks, and you can see that the problem, we have about 1 in 8 households there. I think it's also important to remember the other part of this picture, that 88% of households in Australia have a median income cost of insurance that is only 1 week. So a large part of the market is working. A large part of the market, insurance, is providing an affordable product. But we have this tail where we are getting significant issues. So that's my slide. I'm going to hand over to Andrew to talk to his slide.
Thank you, Shranjit, and thank you for having me here on the panel today. And acknowledge the hard work that the Actuaries Institute do in this space. The ICA really values the work of the actuaries, and we use a lot of their output and studies extensively. When we will pose the question, what is the problem, and can you provide an image? I guess that's an image that's pretty familiar to a lot of people. And it represents older homes built clearly in a location that probably wasn't the smartest place to build in, and it creates that legacy effect. But having thought about it in the last few days, and I didn't want to disrupt the slide build, I actually went back and thought to myself, the photo I should have had on there is a picture of an A380. And the reason why I probably should have had that on there is because I fear that the problem we've got going on in this country is our population is growing rapidly and has been growing rapidly for the past decade through largely migration into the East Coast, into communities that already were built in the wrong location, very much so. And we are really struggling now with a housing challenge and a planning challenge about where we can give people affordable homes to live in. And in too many of the states and territories around this country, what we're seeing is places where people who move to Australia and who live in Australia but want to live somewhere nice, searching out locations that we don't really still understand the topography, the hydrology, and we definitely don't have the building standards up to scratch to put in place homes that will be durable, for the climatic conditions they're going to face for the next 100 years. So I think this is probably the outcome of that problem. This is the outcome of past planning mistakes through European settlement in this country. And like places like California, Florida, Canada, other nations that have really grown only in recent decades, we are copying their mistakes, and insurance is struggling to keep up. We're struggling to price the true risk of where we've built homes and what we're doing about it. And I'm sure we'll come back to it, we will. But again, the data the actuaries have done is incredibly useful because I think we've got to narrow down the actual problem we've got rather than hitting a chestnut with the sledgehammer, and try and focus on where those mistakes were made and prevent them from happening again in the future.
Thanks very much, Andrew. Next up, we have Jake Elwood. This is your image, Jake. Would you like to talk to this one?
Great, thanks very much. Look, Queensland Reconstruction Authority was formed in 2011 in the wake of the tropical cyclone Yasi and the southeast Queensland floods. And since that time, we've faced as a state 117 events, all significant, all impactful. And the Queensland Reconstruction Authority was initially vested with responsibility for the reconstruction part of disaster response, but now since 2015 has had a strong mandate in the resilience field. So obviously we have a very keen interest in where we are and in particular where we're going. I think contextually though it is really important to understand that this is a complex problem. I think around about 75 to 80% of the population of Queensland, of 5.5 million, live in coastal areas or in flood-prone areas. So it is not just a matter of moving everyone. That would be impossible. So I think it is really important to understand where we are, and that comes to my next point, that understanding is the most important first step to take when we are contemplating the where to. And it's important to understand that science has improved over time, where we can now have a much clearer view of where the risks sit. And QRA has worked with a number of organisations to put together a statewide flood risk assessment document last year, seminal, very important. It gives us that understanding. But then, of course, once we understand, then we must act, and we need to make sure that we don't make mistakes of past. I guess I'm a little forgiving of past mistakes because, of course, we didn't have the science that we have now, but I think it would be a crying shame to ignore that science. I think we need to make sure that we're making good decisions. And I think the last thing to note that makes it just that little more complex, as if it wasn't already, is the cost of living issues and the housing crisis that we face. So with all those things intertwined, it is certainly a significant issue.
Thanks very much, Jake. I will now pass to Matt to talk about from the planning perspective.
Thanks very much. And at the Planning Institute, much like the Actuaries, we're the peak body for town planners and urban and regional planners, and anybody who's ever been involved with planning will know that planners love maps. So I wanted to share a map with you today because that's how we as planners start to think about hazards and then how we might address them in planning assessments and development approvals. And what I am showing you today is an example of an old map. And it's a good example actually where we didn't have the science we have today. Later on I'm going to show you a better map. And this is a city in Brisbane, not far from here, one that's flood prone. And what you see here is three things mapped, essentially. What we call a 1 in 100 flood line, a 1 in 20 development line, and some urban stormwater. We can expect to see some creek flooding. What this map doesn't do is take a risk-based approach, and I'm going to talk a bit about that later on in more detail. What it really does is say you're either in or you're out, and that leads to some problems. If you're outside the 1 in 100 floodline, there's a lot more flexibility than within. Typically, if you're within the 1 in 100 floodline, you shouldn't have a subdivision approved. And you can broadly see that. You can see a lot of little lots in the white area and a lot of big lots in the blue area. And the big lots essentially is rural type development, and the little lots, of course, are houses. But that's better than no flood mapping at all, and it's good that most of the house lots are outside where you can expect to see flooding. But the 1 in 100 concept is flawed, and we saw that in 2011, and we've seen that multiple times since. First of all, people misunderstand it. It's about probability in any given year, not once in 100 years, as so often is assumed to be the case. And people, as a result, often assume, therefore, if they experience one bit of flooding in 1 year, they're safe for another 99 years. And that's a real problem for us, particularly in an era of climate change, and particularly in a moment and a decade where science is accelerating and our ability to understand flood and risk is accelerating at a pace of knots. And so our challenge as a planning profession is to take all of the science and insights and intelligence that can be gained as we better understand risk, translate it into maps and codes that sit alongside it, the things that express what development can and can't happen, and to take a truly risk-based approach to understand where development should be approved, where development shouldn't be approved, and where development should be approved, what kinds of development. Because no longer should we simply think that urban development outside a 1 in 100 floodline is okay and within it is not, because sometimes types of development matter as well. Where we locate a hospital might be different to where we want to locate housing when it comes to risk and flood. And I'll talk a bit more about that later.
Great, thanks very much. And lastly, I wanted to pass on to Jane to talk about this from a banking perspective.
Thanks, Ranjit. Yeah, so the problem from a bank's perspective, perhaps obvious, but this is a picture of a house. The house itself is not the problem. The problem is what do we know about the house? And we can perhaps make some assumptions by looking at it. You know, when was it built? What's it made of? What type of street or area is it in? But when we're thinking about resilience, we generally have pretty limited information about what events the property might be exposed to and how the house will fare in relation to those events. And that's both from the perspective of a customer who is buying a house and from the perspective of the bank that is lending a customer money to buy the house. And this problem has an important link to insurance. Both the customer and the bank tend to have a long-term interest in the property. The customer will own the property for a period of time, and the bank will write a mortgage, usually over about a 30-year term. And so one of the ways the customer and the bank can help manage their risk on the properties is via insurance. We make sure customers have insurance at the point of origination of a loan, and our loan contracts say that a customer needs to have insurance throughout the life of the loan. But insurance terms are much shorter than loan terms, and they require customers to renew the policy every year. And there are a range of factors that can affect how easy it is for a customer to renew the policy. As we've just heard, insurance affordability is a really big issue, and this may become a key factor in how easily customers can actually maintain the insurance that we expect them to have. And this then influences how well the customer and the bank are protected in case of any events. From the bank's perspective, a customer without insurance could potentially have a higher loss given default if there's a climate event happen. And so, this lack of information at the point of buying a house or deciding to lend to a customer to buy a house really makes understanding the risks tricky. For information like exposure to natural perils, the challenge tends to be that the information is out there somewhere, but we don't necessarily have access to it at the point that it's relevant for making the decision. And for information on how well a house might fare in relation to perils, that information may not even actually exist at the moment. And so it's this lack of information that's a barrier to knowing what could be done to have safer homes.
Thanks, Jane. There's a range of issues that you've talked about there. So I want to make a confession, everyone. I have lost my notes where I had all my questions down for the panel, right? So, no, I'll be fine. But I'm going to ask the audience for help. So please start typing your questions in. Rescue me out of a hard spot so that I can start pushing them up and do that. And the panel are going to, I did give them some prepared questions, so now they're going to have unprepared questions. So please be gentle on us and certainly help me out by starting to put some questions up there. So Andrew, I want to come back to your point, because I think it's very important for us to think about this affordable insurance in the context of affordable housing, as you brought up. What are you seeing happening in this area, and are you concerned from an insurance perspective about what are the initiatives governments are taking around getting more affordable housing, and are they thinking enough about insurance in that prospect?
I think there's been a significant mindset shift by governments at both the state and federal level across the country. It's been slowly happening. Queensland, I think, it happened a longer time ago, because 60% of all declared catastrophes, insurance catastrophes, happen here in this state. So Queensland's had to think about it. I think places like Brisbane City have thought about flood risk now for 50 years or more in a far more sophisticated fashion. We're seeing, I think, a politician said to me recently, it dawned on them that really what they're running is massive insurance businesses in government. And it's true, particularly the federal government. Effectively, what the federal government does is it's running a massive health insurance, defence insurance, all this other insurance. But they've started to realise that they're covering more and more of really what the private market should be capable of covering and sharing that risk. So what do we need to do to make sure that market remains vibrant and affordable and accessible for people? And I think understanding, moving beyond just that initial realisation to, that's right, they must be pricing an underlying risk. What is that risk, and how can we change that risk narrative? That's becoming more and more in the forefront. So last year, we travelled to London with the Assistant Treasurer, Stephen Jones, and we met with reinsurers, with brokers of reinsurance, with Lloyds and others. And their message was very clear about Australia. They put Australia and New Zealand together in the same bucket when they think about this part of the world. But the challenges are similar. They're saying to us, you've got to improve your risk profile, your risk narrative to the world has to change. It's no longer good enough to think, well, we live in a tough country and we're tough people and we will get by. You now are a country of 25 million plus people, growing every year, and you need to house them in places that are safe and durable to the climate, because we keep losing money, and that's going to stop. So it is a challenge that governments, I think, are picking up. And an example of this has been, well, here in Queensland, there's the strengthening programs that I'm sure Jake will talk about. In New South Wales, the Minns government recently cancelled a development approval in the northwest of Sydney that would have seen around 2,000 homes put in an area that is largely, it's definitely under the 1 in 100. It was more like a 1 in 20 flood zone. And and then the shock jocks and others were, critical of me and people thinking that we're predicting all this doom and gloom. I just think it was the smartest decision, because in the next 20 years, Chris Minns or whoever follows him as Premier won't be visiting a flooded suburb. And, Sydney can focus on what it needs to do, which is urban infill and going up around transport links, rather than this continual spread into cheap floodplain land in the northwest. So we are seeing some examples of this around the country, but we need to move faster. And we are doing work at the moment at the ICA, really trying to understand particularly recent development approvals across all the states, and where they're happening in areas they shouldn't still be happening in. And we'll be talking more about that in coming months. Thanks,
Andrew. Jake, I wonder if you could share some perspectives from the QRA about, particularly about how the government works in this area. So QRA kind of works with the local councils, but also works with the state government, as Andrew's talked about, that then flows through to the federal government through some of the disaster arrangements that are there. How well do you think that system is working?
So look, from my perspective, and I have had the opportunity to work with a number of states in previous disasters, our strength is definitely our locally led approach. There's no doubt in my mind that councils and community understand their risk probably better than anyone else, and so they need to be heard and they need to have agency in what happens in their communities and within their councils. State obviously is there to support and enable and also to listen, to make sure we provide them with the support that they need. And indeed we've worked very closely with the federal government and continue to do so to make sure that right packages are provided to support the communities. But if you look at something like the Resilient Homes program, where we've undertaken things like raise, retrofit, and in the last instance, the voluntary home buyback. We worked and continue to work very closely, directly with councils and through councils to make sure that it's a team effort. You know, I guess from my perspective, we will not get through this if we're not working as a team. And so from federal, down to state, down to local, but also with industry, to make sure that we're all working together, it's going to be key.
Thanks very much, Jake. Matt, I think I have so I've asked around for people for questions I should ask the panel, and there was the $1 million question, which I'm going to put to you now, which is, why do we keep building homes in flood zones? Can you please explain this to us? Because I think many are kind of just don't understand what's driving that issue.
Look, it's a great question. One of the challenges of working with planners, I'm a planner myself, is that often all the problems of the world fall at our feet too. And sometimes I wish planners were all powerful as people think occasionally. I think it's our job to fix the housing crisis, for example. But I think, like anything, more seriously, as we talked about, there are a lot of complex factors going on in this environment of hazard and peril. I would probably call out 4 factors, some of which are within the control of planners and some of which are beyond, that result in us still making approvals for housing in areas that could flood. First of all, imperfect information. I think, as Jake mentioned, we have seen some really significant progress in how we understand hazard and how we can map it and how we can build it into our town plans. But that is not universal. And so that imperfect information means that to get that better science is often expensive, it's often time consuming, and what that means is it is often beyond the reach of too many local councils in this country, because most of the local councils in this country are relatively small with relatively modest budgets. One of the most comprehensive flood catchment modelling exercises I've ever seen is the Brisbane River Catchment Study.
Yeah.
Many years, many millions of dollars, big commitments from multiple local governments, including Brisbane and Ipswich, and of course the state government as well. And that has resulted in probably some of the most sophisticated approaches to flood and hazard in those local council areas as a result, born of necessity because of the significant impacts we saw in 2011 and 2022. But that is not replicated everywhere, and we need to start to think about how we invest in the high quality mapping, the high quality studies that can allow us to do it. I won't even talk about some of the challenges of finding the hydrological expertise to do it, because that's a pressure as well. Second of all, legacy as well. The way planning systems operate in most of the country means that development approvals, once they're given, trump everything else, which means even if we update the mapping, those development approvals typically can continue to override that if the approval exists. Now, most approvals are time limited. Now, that works if you're a house, build it or lose it. You've usually got a year or 2 in most systems. But in big subdivisions, Once you start it, the approval can last for many, many years, decades even. And so that means even where information is updated, our systems don't allow us to change approvals. And that, of course, reflects the fact that development investment needs certainty. Banks want certainty. They don't want to see approvals changed willy-nilly, of course, because that affects the investment proposition and the underlying finances. But it is a challenge. Thirdly, governance failures as well. I can't think of how many planners have been abused, as have councillors, in public meetings where new flood maps have been released that suddenly map new houses. The sky is going to fall in, property prices will be affected. They probably will. But the truth, of course, is just because the house is mapped doesn't mean it's going to flood, and just because the house is not mapped, it doesn't mean it's not going to flood. We just know now that it will. And so sometimes for elected officials, it can be a challenge to stand up to communities and make sure that those flood maps are as accurate and up to date as they should be. And we've seen some pretty robust discussions, often hinging on some red hot button issues around things like climate change and how much we should account for climate change, particularly in areas, coastal areas, where we're going to see more storm surge and sea level rise. And fourthly, perhaps most provocatively, I'm from Brisbane, and so my contention also would be, and maybe this goes to my risk appetite, sometimes it's okay to have homes in a floodplain where proper risk-based approach to planning and design has occurred and owners are properly informed and understand those risks. It's why Queenslanders evolved over many years on stumps, and we're now seeing in some areas modern interpretations of that. Now, I talked earlier about risk-based approaches. I'll talk more about that later, but that's really critical because in areas of high risk, you absolutely should not be seeing new homes being built. We need to make sure we strengthen the ability to achieve that. But in areas of low risk, where you might see some flooding in the backyard, or possibly if the house is built correctly, flooding that goes under the house, that might be okay in some areas, but we need the right tools to assess and evaluate that and strict standards in place to make sure that we're not approving new housing in areas of high flood risk.
Thank you. Hopefully that's shed some light on the complexities of why we are in the situation we have so many houses in flood zones. Jane, I wanted to talk to you here about the bank's role here because so Bank Australia is a customer-owned bank, right? And I think this is a very interesting question from a mutual perspective and from an equity perspective as well. What do you see your role as a mutual bank in helping address this issue?
Yeah, that's a great question because I think when we're looking at this, there's the lens of the bank needing to protect itself from risk, but there's also the lens of, well, our customers own the bank and we want to work with them as constructively as we possibly can to help build this better understanding and make good decisions into the future. As I touched on, banks lend to customers to buy homes over a really long period, usually 30 years, up to that. And while the life of a mortgage in practice is usually under 30 years, when we're thinking about risks in situations like this, we need to plan and be ready to deal with that long term if that's how it plays out. As we know, for a mortgage, a bank will take security over the property to make sure that if the customer isn't able to pay the loan, the bank can sell the property to recoup the funds it lent. But as a customer-owned bank, this isn't something that we like to do, and we definitely don't jump to it in the first instance. It's something that we would really try to constructively work with customers to understand their situation and make the best choices for them. All this though is based on the idea that the underlying property is, worth a particular value to the customer and to the bank. And, when the bank requires a customer to have insurance, it's based on protecting that value of the property. So I think as we're working this through, we're trying to think about how we can get better information, how we can then actually be having conversations with customers about that. And that's something we're not well practiced at doing yet. And we're really going to have to work out how to do it because, as you've touched on, people don't necessarily love to have conversations about the future and what what risks might be to a property that they really want to buy. So this is also, I suppose, what we're thinking about is how do we get this better information, and then how do we interact with customers around it, and then potentially support them to make good decisions in what they buy, or if they already own a home, whether there are changes that they can make to the home, things that they can do to have more affordable insurance over time to help them, stay in the property and thrive there.
Thank you. I am conscious of time, so I'm going to move to the solutions. I think we can actually spend a lot more time talking about the problems, but I'm going to move now to the solutions, and we'll come back to the problems, no doubt. But again, we did a kind of show and tell, and I asked every panel member to give us an image of what the solution might look like going forward. I'm going to start. So what I'm showing you here is something from the Resilient Building Council, which is a not-for-profit that has been funded by federal government, that has been working very closely with the insurance industry and with the banking industry and others. And their concept is that consumers can go onto a website, and you can see one there, and they can do a risk assessment of their properties. They can put in all this information and data about their properties. The app not only just tells them what their risk is, but then through a lot of research that they've done, provides recommendations on what they can do to improve the resilience of their home. Currently, it covers bushfire, but over the course of the next couple of years, it will include flood, it will include all the other perils, and will also include things like energy efficiency and other aspects. Now, the reason I'm calling this out is a large part of this is based on the idea of the consumer being empowered with information. I think from my perspective, Australia has a love affair with property. It is the constant conversation. It is the decisions often about investment households will make is like, should we build another bedroom? Should we upgrade the bathroom or the kitchen? How about, should we tie down the roofs and make them safer? Should we raise the floors and reduce that? So, because ultimately, I think for a sustainable solution, it's not necessarily about governments throwing money or banks or insurers doing things. It is actually about the consumers leading that way. So that's part of what I think is a big part of the solution. Handing over to Andrew to talk about this.
Thank you. And but before we just move on to my slide, I just want to endorse the work that the Resilient Building Council is doing there. We've just launched the Bushfire Resilient app with them, and already two of the largest insurers, Suncorp and IAG, have signed up and are providing discounted premiums for people who can get the highest ratings on that app. The thing about the work the Resilient Building Council is doing is that it's incredibly evidence-based. It provides insurers with a lot of assurance that what the work that's being done is actually going to pay a dividend. And we're very excited about the next iteration and are urging government to stay close to the Resilient Building Council, not reinvent the wheel. It is a body of work that we've got to keep developing and supporting, and insurers have a high degree of confidence in the work the RBC are doing. So that's my little plug for the Resilient Building Council today. Talking about a resilient building and talking about Matt's love of an old Queenslander, the reality is if you're going to be living in an area prone to flood and inundation, the smartest thing that we can be doing is lifting homes so that contents and the expensive stuff, electrical and the like, can be out of harm's way. In these cases, we've got all of so much both local and international understanding around how this can be done these days. What it means from an insurance perspective is, though, it could give that person the confidence to take a policy where they opt out of the flood cover. Insurers may still consider the area a flood risk, but this is the one way the consumer has to cover every other peril their property faces, fire, theft, and all the other things that can happen. But ensure that the core asset of their building and the like is largely intact, water flows through. It may be that there is, the policy can cover some of the cleanup and the like. I think about being here in Queensland, I think about Townsville, and I'm sure many people are familiar with Adalia, the southern suburbs of Townsville there that were built, 20 years ago. And the irony is when you drive into them, on the other side of the road of the Bruce Highway is the railway line and an old railway siding village that was probably built in the turn of the 19th century, 20th century there. And they're all old Queenslanders, and they're all at least 4 metres in the air, basically, all very tall Queenslanders. And yet across the road, we went and built a couple of thousand homes on concrete slabs, and then we're just shocked when 2 metres of water went through it. I think, and this is the problem of what's been built then in the last 20 years, is that you can't raise those houses. It's very expensive and very hard. So insurers like Suncorp and others have done a lot of thinking in this space. James Cook University, the technology's there. Australians are very good at this, and I think the more that insurers can recognise this work and reward people through their premiums, and I think banks could do the same through their mortgage rates and the like, I think we can start shifting the market into homes that suit the environment they're being built for.
Thanks, Andrew. Jake?
Look, I think from our perspective, there are a number of things that we can do that can really make a difference in, firstly, I guess, left of event, making sure that we are doing the right things in terms of planning and how we build, where we build. That's important. But for where we already are, there are a number of different measures that we can take that can mitigate. So it might be structural, things like levees, drainage, that sort of thing. It could be environmental, where you have detention basins and all those sorts of things that actually mitigate the potential flood waters. And then beyond that, obviously, it's the where something's been built, maybe do a raise or a retrofit. Now, if you look at the Resilient Homes Fund, we undertook and are undertaking a number of retrofits, which is essentially using different material than was originally used, that when it's wet, it dries quickly and really people can get back on with their lives. It's not optimal because the house still gets flooded, but what it does mean is that the homeowner can make decisions, maybe take things out of the house, raise things, knowing that where things have that retrofit, it will likely survive a flood, and that will allow recovery to be much quicker. Then we had the raise, and that is again ongoing, and that's, it's a tried and tested method. Now, the good part about raise is that will often have a positive impact in terms of their premium. I think the one thing that might be good, that would be good in fact, is to look at retrofit and to see where insurance premiums can look at that, because you do need to incentivise. There is a cost that comes with building with different materials. It's not easy for the insurers because it requires a much more nuanced approach to each house and understanding how it's been built and how it's been amended. And then we come to the sort of the buybacks, and obviously Grantham in 2011. Where, and some may not know it, there was around about 100 homes that were taken from an area that was devastated by floods in the Lockyer Valley, and were moved on to high ground nearby. It was fortuitous that there was a tract of land that was sort of situated nearby that homes could be placed up there. And pleasingly, in the 21-22 floods, none of those homes were inundated, which was great to see. Unfortunately, some that had remained were indeed inundated. But it was an unusual moment where you could find a perfect piece of ground right next to where the community had been living. And this comes to things like the buyback. So that has been it's a great program, and it has changed people's lives. And even with the last floods over Christmas, we've been back to some of those areas that is now parkland, and indeed had there been a house on it, it would have flooded. So it really vindicated the approach. But a $741 million program, and we're looking at around about, I think it's 680 homes, but that is 0.1% of Queensland homes that are in the 1% AEP, 0.1%. So it's not the silver bullet, it's an option, but there are a number of unintended consequences that come with it. The complexities. When people volunteered for the buyback, some couldn't live back where they were living because of the cost or the availability of housing, so they had to move from where they were. They had to leave their, their precious dwelling. For many, that was a very hard decision to take. So these are not simple things to do, and so to me the buyback should be seen as the very last thing. And as coming back to the point I made at the beginning, the housing crisis, that's 680 homes that are no longer there, and it's a good thing because of course they were in very high risk areas that would not only flood routinely, but the velocity of water was also a risk to life and limb. So it wasn't really a choice. Yeah, I think there are a number of things that we can do that we are doing. I think Queensland is leading the way, and I think just to continue to work closely. But I do believe that if we can incentivise wherever people are making good decisions, and it's hard in a time where people are fiscally constrained to make that decision to pay more, to raise or retrofit, or as you're designing a home to take particular measures. If there's I think if there is a reward in terms of insurance premiums, that would be a good thing.
Thank you, Jake. Matt.
Thanks, Sharon G.
Another map.
So another map. So this is the contrast map, and this is an example of a much more risk-based approach to planning. It's taken from the current Brisbane City Council town plan. The big blue bit in the middle is, of course, the Brisbane River. And as you will be very familiar with, Brisbane has obviously had some very significant flooding, particularly in 2011 and 2022. And that has really driven much better modelling, much better scientific understanding of how the floodplain operates. And that's been able to be now reflected in the town plan, and as a result in development decisions. And so what you see here is, instead of that 1 in 100 flood line, Brisbane now maps 5 different flood planning areas, and they're shown there in gradients of colour. And those 5 flood planning areas are intended to show different levels of risk. And that then corresponds to a table in the town plan demonstrating what types of development will be approved in different areas of risk. And so what the code tells us in that town plan, for example, is if you want to build a unit block above 4 stories, it's okay to build it in flood planning area 5, 4 or 3, but not in flood planning area 2 or 1, and they're the 2 riskiest areas. But it also says that if you're going to build that unit block in flood planning area 5, 4 or 3, different standards are going to apply depending on whether you're in 5 or 3, in terms of how you build it, in terms of how it's located, and in terms of things like the location of services, etc. In contrast, a hospital can't be built in any area but floodplain area 5, the lowest risk area, whereas a park, that's compatible everywhere. In red, you can actually see the apartment block I live in Brisbane. Our site was affected by flooding in 2011 and 2022. Our basement was flooded where the cars are parked, but that was okay because in Brisbane you typically see slow-moving riverine floods where we actually had nearly 2 days' notice to move the cars, people to get their stuff out of the basement. Our services, being where we're located, our electricity substation, for example, is in a flood-immune area, so it wasn't affected. Just the basement was flooded. Now that still came at a cost. As a body corporate, we had to spend $20,000 to pump and clean the basement after that event, but there wasn't any damage to habitable areas in the apartment block. It was just a bit of cleanup. And this is an example of risk-based approach to planning, because the idea that this land should never have homes on it is really challenging to me. It's 2 kilometres from the Brisbane CBD. It's next to some of the highest amenity areas in Brisbane that have been developed for a very, very long time. High frequency public transport, lots of infrastructure investment already. So there's a lot of reasons why we might think about taking a risk-based approach in this location. How you think about this in a greenfield area that's not been developed, that's a different kettle of fish as well. But in some areas, this is an example of how a risk-based approach to planning can help us think about what kinds of development might be okay in some areas that could be subject to some level of peril. But in order to do that, you can only do it if you've got the right modelling, great science behind it, and you're taking a cautious approach ultimately to where things can go and the kind of building requirements that you will build in where those things are being permitted.
Thank you, Matt. Jane.
Yeah, so on the solution side, I think we know that there are different actors that will all be playing a role in safer homes and affordable insurance, including customers, banks, insurers, and government. And when I started thinking about how to depict this, I started thinking about them all needing to be connected, for example, with overlapping circles. And then I thought about it a bit more, and I thought, in reality, they're actually not all going to be directly connected. You know, you're going to have one customer will have a bank, an insurer, and be in a particular government jurisdiction. You know, another customer might have the same bank, but they'll have a different insurer and live in a different government jurisdiction with a whole different set of rules over it. So what we need is not necessarily direct connections between all of these, but we need consistent information and ways of sharing it. And the more we can bring in that consistency, the less it matters which combination of bank, insurer, and government a customer has. And I think the other thing that we need, if we want to be supporting people to take steps to make their home safer, is consistent criteria for resilience. So that's probably another plug there for the Resilient Building Council and the work they've been doing. But you know, in practice, if you've got a customer who wants to make upgrades to their home, they need to know which steps to actually take to help reduce their risk and make the home safer. And if a bank or an insurer wants to reward a customer for reducing their risk and making the home safer, the customer needs a clear way to understand the criteria that have been set by the insurer and the bank, and then to evidence that they've actually made those changes. And look, in an ideal world, those upgrade criteria set by a bank and insurer would be relatively comparable between them. You know, from a customer perspective, it's the one house. So if you make upgrades to meet the bank's criteria and then find out from your insurer that the windows had to be slightly different, that's very impractical. So we want people kind of working towards consistent upgrades that will be recognised by multiple parties. So yeah, I think in summary, just ways of connecting those different actors via shared information and consistent criteria is the solution that we'd like to see here.
Yes, that's right. And I guess, again, plugging the Resilient Building Council, that rating recognising by both banks and by insurers at the same time allows interoperability, I think is the fancy word for this discussion. We've got some time. I'm going to ask you a few more questions here. Andrew, one of the things the government has done historically has been to introduce the cyclone reinsurance pool. And when we have seen pools in different parts of the world, what would you say would be the benefits, or is there merit in looking at, say, a flood pool for Australia?
Certainly in Queensland.
This is a very challenging and big question, okay?
Yes.
So this is not official ICA policy. I'll make that very clear. Look, it's a very popular political idea to suggest that we could just magically pool the risk, and it's going to sit over here, and that's going to effectively subsidise, without using that word, the cost of insurance for those high-risk properties. And this comes back to the point that I made just at the very outset here. I think our job needs to be in very close partnership with governments and the community, governments at all levels, is to identify exactly what the problem is we're trying to solve for here. Across the board, insurance premiums have gone up, and that's largely driven by inflation. And a repricing of home and contents that's probably been the biggest jump in 2 decades. So it's been an absolute shock to consumers and to the system, and it's one that I think people are really just only adjusting around. But where your premium has jumped to $15,000, $20,000, $30,000, it generally has been in those areas where the data is showing that the home was built in the wrong location. If we can get narrowed down the problem, and I know the actuaries have done work and have got an estimate around how many homes that may be. I think when you put over the top of that a socio-economic layer, I mean, I don't think we're worried about Clive Palmer's home on the Brisbane River, but I think we start narrowing right down to those people who can least afford the house raising, least afford the hardening, who have dropped out of the insurance market altogether, likely can't sell their property because of the known factors around it. And then they go through a flood and they enter a period of, it becomes intergenerational poverty. You just go backwards and backwards and backwards. I think if we can narrow it down to the problem we're trying to fix, that then throws up different solutions. And there are pools all around the world that have been constructed for good reasons. An earthquake pool in New Zealand effectively kind of makes sense. But I would worry that we're smashing the chestnut with the sledgehammer here. I think we've got to be really surgical and clever about how we do deal with that problem, because we've got to deal with it. And we've got to make sure we don't upset the rest of the system in doing that.
Thank you. Thank you. I'll go to something you was talking about there, Matt. And, you know, there's been this kind of, I guess, viewpoint where nature needs to be controlled, that, you know, the floods are the enemy and we need to go in and, you know, build these walls to protect ourselves and that type of view. And that's, I guess, what might be characteristic of kind of a Western or a European approach to development. What you were talking about there seemed much more about how do we live with the river? How do we understand a river as being a natural thing that will flood, that's part of how it does, and how do we live with it and live with nature? Am I just being a green hippie here, or do you think there's something in the way that thinking is moving?
Look, I think there's an element to that, but we're all hippies now. I mean, I think it depends on your location, and it also depends on the peril. I mean, there's clearly life or death when it comes to bushfire, and it's very easy in a decision-making sense to be very clear about what is acceptable and not acceptable in a bushfire environment. In a flood environment, the reality is that some of our cities, and as I said, I'm a Queenslander from Brisbane, which probably shapes my attitude, vast swaths of the city are built on a floodplain, and that is a historical legacy that will not change, and it is one, therefore, that means we need to figure out how we live effectively with it, both in a social sense, in an environmental sense, and of course in an economic sense as well. And as Andrew alluded to at the start, in a high population growth environment with high demand for housing, that of course adds even more complexity into the equation. So in existing urban areas where we see high risks of flood, we do need to learn to live with flooding. There's a bit of a prominent book in the literature that talks about Brisbane as a city with a river problem versus a river with a city problem. And there's some truth to that. But in areas where we are making choices from the ground up, in greenfield environments, we shouldn't, of course, repeat the mistakes of the past. That allows us to make different decisions. And so the decision-making frameworks we employ need to be informed by the best science, but also pragmatic as to what has come before us and what lays ahead of us in the future.
I would also say, not all in fact, much of the flooding that we see is not just riverine. So we see a lot of overland flow, and I've met many people who have said that time was the first time that they're flooded, and so I think the other part is to understand that with changing weather patterns, impacts can be different, and so every problem may not look the same, and I don't think every problem is a river or a creek. I think, yeah.
Well, I think the thing we haven't touched on much today, that is probably one of the most invidious problems ahead of us, is storm surge and sea level rise. And I'm conscious of the time, but that is one of the areas where we are going to have some of the most significant, over the long run, risks and some of the most difficult community conversations ahead as we start to think about things like planned retreat, which even as a concept is anathema in so many parts of the public discussion, because there is so much at stake for so many people living in coastal areas, and as you alluded to, property and where people live and the places they love is so much bound up in the Australian identity now.
And Matt, I would suggest, this came up in a panel I was on recently, I hate that word retreat. I think we should actually change the terminology and call it upgrade. I mean, we're actually asking people to move to a safer location.
Absolutely.
And surely that is an upgrade, not a retreat.
Yep. Depends if you live on the beach today, though.
Well, the beach is probably a shift, right?
Correct.
I mean, sitting behind this as well is the very vexed question of who pays for resilience, right? And partly, you know, I've sort of talked about, you know, there's a certain part in which the consumer does. We've seen the government do through the large fund pay for the very extreme buybacks and you know, effectively the taxpayers paying for some of that. And you know, they often will come up in the discussion about those coastal risks that why should I pay for someone else to have a safer mansion on the beach? Like, you know, who's, you know, what are your thoughts, panel, about that questions of equity and how we sort of start to grapple with the question of who pays for this? Jake?
Look, I would say I think it's the issue of resilience is one that is, it's not just money. It's actually about understanding. To me, I've seen many people who have been inundated who weren't expecting it. And because they weren't expecting it, they didn't move anything, so they lost all their belongings. And so, you know, the first step in resilience is actually having an understanding of the risk that you're living with. And so I think everyone needs to do that, and we need to support them in making sure that they understand their risk. Because, of course, you know, resilience is not necessarily the avoidance of a disaster, rather it is how you can bounce back quickly. And so I think we also have to come to terms with the fact that we will be subject to significant events. That will happen, and people will be subject to disasters and to turmoil themselves. It's the wraparound things that we have to make them more resilient. So I don't think it is just bricks and mortars. I don't think it's just roads. I think it goes to economic, it goes to environmental, it goes to social, it does go to transport and roads, and it does go to buildings. But I think it's as I said at the outset, this is a team effort.
Thank you.
We're already paying, you know, I think it's up to 16 billion of insured losses since the Black Summer. Insurance premiums have gone up. The state and federal governments had to put in $1.5 billion on buybacks in the Northern Rivers and Brisbane alone. And that will only, that'll be about 1,000 homes in total when it's all said and done. It all goes back to that Productivity Commission report in 2014, 97.3. Until we shift that needle, it's just, are we paying in catch-up or are we going to pay in advance? So I think this is really the policy shift that's needed.
Great. I think I will wrap up there and give us a question. And this, you want to have okay, great. So thank you very much. Look, I really want to thank the panel for joining us and giving us multiple perspectives on what is what we would classically call a wicked problem that involves multiple stakeholders, involves thinking about responsibility and thinking about solutions. And I hope you found that an informative thing of how we've ended up in this situation and potentially what might be the pathways out going forward. So if you'd like to join me in thanking the panel, that would be great.